Joining us now is Bill Camporeale, JPMorgan Asset Management Portfolio Manager on the Multi-Asset Solutions team. Always a mouthful. Good to see you, Bill.
Good to see you.
So why are you not convinced?
Yeah, so we're still underweight right now because the Fed last year did their quickest monetary tightening that they have ever done. They've moved by 450 before, but they've never done it that quickly. So there still remains uncertainty about what that lagged effect of policy does. However, the 60-40 portfolio, right, the multi-asset portfolio that was so painful last year. Sarah, last year was the first year since 1974 that 60-40 portfolio was down, with both stocks and bonds being down. It's so hard to manage risk in that environment.
So that you think changes, bonds
So that changes, right. So the bonds work. And I think one of the things that was underestimated last year was just the fact there was nowhere to hide. You couldn't manage risk less clearly unless you just said, okay, I'm going to go into cash. And nobody really thinks about that. Now, what this sets us up for now is we have the best forward-looking return on the 60-40 of 7.2% that we have had over the next decade since 2010, right? So the cost-benefit analysis for the Fed here, all right, what's the benefit of them continuing to move so aggressively if the cost of those hikes puts undue and uncertainty on the economy in a world where inflation is moving in the right direction? And we have evidence, a lot of evidence, ISM prices paid, services prices paid, and the wage report from last Friday that tells us that inflation is heading in the right direction.
So you think the Fed is close to wrapping it up?
We think they're close to wrapping it up, thank goodness. And I'm going to convince you, Sarah, that they're not going to move by 450 basis points this year, right? So
do you think they're going to cut?
Now, cutting, we would need a real sharp pullback in the economy for that.
But you're not bullish on the Fed pausing, because you still think, what, recession's not priced in? Or
well, we
weakness?
think that the Fed pauses. Fixed income is a nice place to go. The dollar is important here. The dollar weakens, which introduces a whole bunch of asset classes outside of the U.S. And right now, we're long some calls on the S&P. Yes, we're underweight, but we're long calls on the S&P that can get us back into the S&P if that underweight is incorrect.
It did feel toward the end of last year that everyone and big funds and strategists were bearish this year. Yep. They're worried about the world falling apart because of all the Fed tightening and the fact that we haven't seen the recession yet and the Fed is still hell-bent on tightening. And it became a little consensus.
Yeah, but it was a race. It's always been a race between growth and inflation, right? So if we're getting evidence now, Sarah, that inflation is heading in the right direction. By the way, it's not going to be 2 anytime soon, but heading in the right direction. And tomorrow we get a CPI number that's likely going to seal the deal between 25 and 50
I don't know. Rodney
points.
McMullen didn't make me feel like food inflation is coming down anytime soon.
Yeah, but there's 3 pieces, right? It's goods inflation, definitely coming down. Everybody can afford a car again. And then you have the shelter inflation, and you talked about that, right?
Yeah.
Shelter inflation
not
seems
coming down super fast either.
Owner's equivalent rent looks lagged. I think the more anecdotal pieces of rents look like they're coming down. And then there's that part where wage inflation is so important. It's services x shelter, going to hotels, going to things like that, restaurants, and all that stuff. That's the part that we need to head in the right direction. In order to be really bearish here, Sarah, you have to have the view that the Fed's taking the policy rate to 6%. That is not priced in. That's a microcosm of where we were last year, and that puts a lot of pressure on the equity market. That is not our base case. That would be something that would keep us up at night, though.